Every so often, a company pulls off a comeback that's just so dramatic, it makes everyone stop and pay attention. Well, today, we're diving into the story of Kenya Airways. We're going to look at their financial flight recorder, if you will, to figure out how they managed one of the most incredible turnarounds we've seen in a long, long time.
Okay, let's just jump right into the numbers because they're pretty wild. In just one single year, Kenya's national airline went from a massive 22.7 billion shilling loss to a 5.4 billion shilling profit. I mean, that is a huge shift. We're talking nearly 200 million US dollars. This is not some small adjustment, folks. This is like a complete U-turn at 30,000 feet.
So, first things first, let's really get our heads around the sheer scale of this change, because, this wasn't just about getting back to breaking even. Oh no, it goes way beyond that.
And this number right here, this is the key. It's not just about the profit they made, it's about all the ground they covered to get there. Think about it. You have to erase that huge loss from last year and then get into profit. So, when you add it all up, you get this massive positive swing of over 28 billion shillings. That's the real story of this comeback.
Right. So a turnaround like this, it doesn't just happen by luck. You need a solid, disciplined game plan. So now let's get into the nitty-gritty and break down the actual blueprint Kenya Airways used to pull off this incredible financial liftoff.
So the big question is, right, how on earth did they do it? Was it just getting more people on planes? Was it some aggressive cost cutting? Or was there something else happening behind the scenes? Well, as it turns out, the answer is, yeah, it was a bit of all of that.
If you look at their annual report, their whole strategy was basically a three-part flight plan. Super simple on the surface. Number one, make more money, right? Boost that revenue. Number two, get more efficient, spend smarter. And number three, and listen up because this is absolutely the most critical piece of the whole puzzle, they had to tame their massive runaway financial costs.
So, first up, boosting revenue. They managed to increase their total revenue by nearly 10 billion shillings. And they did it by focusing on the fundamentals, the basics, getting more passengers and seats, and, interestingly, a huge 19% jump in their cargo business. This just goes to show that the core of the airline, the actual flying part, was getting a lot healthier.
Okay, next up was efficiency. The airline kicked off this big strategic project. They called it Project Kifaru 2.0. Kifaru means rhino, by the way, and wow, did it deliver. They found 116 million US dollars in savings just by cutting costs and operating smarter. So think about it, right? They're earning more and they're spending less. That's a powerful combination.
But here's the thing, even with more money coming in and less money going out, that still doesn't quite explain that giant 28 billion shilling swing. To really get it, we have to look at the one massive financial headwind, this huge anchor that had been dragging the airline down for years.
And boom, here it is. This slide right here is the main event. Just look at that drop in net finance costs. It went from a staggering 33.4 billion shillings all the way down to 11.1 billion. This one line on the balance sheet, this was responsible for the vast majority of the airline's comeback.
So you're asking, what happened? Well, the simple answer is one word: Forex. Foreign exchange. See, a lot of the airline's biggest bills, like leasing their planes and their debt, are paid in US dollars. Back in 2023, the Kenyan shilling got weaker, which made those dollar debts way more expensive. But in 2024, the shilling got much, much stronger. Let me put it this way. If you owe someone $100, you'd much rather pay them back when it costs you 130 shillings per dollar instead of 160, right? That change in the exchange rate created this huge paper gain on their books that basically canceled out the massive losses from the year before.
But a story like this is never just about spreadsheets and currency rates. It's also about the people, the passengers, and the actual performance that drives those numbers. So let's zoom in a bit and look at the human side of this turnaround, because that tells you a lot about the real health of the airline.
And this table here really lays it out. This comeback wasn't just a story about lucky Forex gains. The core business, flying people and shipping cargo, both saw real healthy growth. That tells you there was a fundamental improvement in how they were running the airline, not just a fortunate bounce in the currency market.
And here's something I find really encouraging. This financial success seems to go hand in hand with how they're treating their team. Look at this. Employee satisfaction went up. Their net promoter score, which is basically how much customers like them, nearly doubled. And this is huge. They converted over 400 contract workers into permanent staff. These are all signs of a company that's healing from the inside out.
Okay,
But a good story doesn't just focus on the good news, right? To really understand what's going on, we have to look at the potential turbulence that's still on the horizon. And to their credit, the airline itself is being really upfront about the challenges that are still out there.
And this right here, this is taken straight from their own annual report. It's their own risk assessment. And what it tells us is that, hey, while the profit is fantastic news, this flight to long-term stability is definitely not over yet. Management knows they've still got some major risks to navigate. So let's break down what's on their radar. First up, financial liquidity. Basically just having enough cash on hand to pay the bills and their huge debt. That's still a major pressure point. Second, fuel prices. That's a classic one. It's a constant headache for literally every airline. And third, just intense competition. The skies are crowded and they're constantly fighting for market share.
And now, for probably the most sobering part of this whole story. This is a direct quote from their independent auditor, PwC. Now, when an auditor uses phrases like material uncertainty and questions the ability to continue as a going concern, that's auditor speak for a massive red flag. It's their formal way of saying, hey, there are still some very serious financial problems here that could threaten the whole company's future.
And here's the number that explains that warning. Despite making a profit, the airline is still in what's called negative equity. That means their total liabilities, everything they owe, is more than 118 billion shillings greater than their total assets, everything they own. That is the fundamental financial problem that's making the auditors so nervous.
So that really brings us to the big question, doesn't it? Kenya Airways has pulled off this absolutely remarkable turnaround. They've climbed out of a deep, dark hole, and they are definitely flying in the right direction. But with that mountain of debt still on the books, and with a big part of this profit coming from favorable currency wins, the biggest challenge they face now is proving that this incredible recovery is actually built to last.